What's up guys, Zobina, and before I start this video I would like to apologize. I'm sorry. Before I started this channel I didn't think anyone was actually gonna watch it, so the quality of videos may have been a bit subpar. But look, I'm gonna do you guys a favor. See, I fixed it. Color grading. I'm sure you guys can tell that the energy for this video is completely different, but that's for a good reason. I'm pissed. There's been a lot of FUD online and a lot of people that just saying absolute rubbish. So I'm just here to clear it up.
Here, Graham, it's guys, you up what's? Well, get ready for the price of Bitcoin to collapse into the abyss of nothing because I just bought some Bitcoin.
Oh no, Graham, what have you done?
Seriously, for some reason, when it comes to these things, it seems like the entire universe is conspiring against me, and everyone is waiting to sell at the precise moment that I buy in. But despite that, I said what I would do a week ago, and I bought it.
Graham, man, I think that's how you say it, Graham Stephan. This hurts me that he actually did this. I'm not even gonna lie. Yo, I've looked up to Graham Stephan for so long for financial advice. Graham, you just noticed my comment and you responded with both channels and I liked it twice. I think what's happening right now is just showing how much euphoria is in the market right now. Graham Stephan is dumping all his cash and then all of a sudden he's buying Bitcoin. Why, Graham?
This definitely was not a decision out of FOMO. It wasn't me trying to rush in to make as much money as possible.
Sure, it wasn't. You know, I'd just like to touch on that point because he's right. Most people are just looking at cryptos right now because they just want to make money. Everybody's making money in the market except for the people who bought Bitcoin at 41,000.
Oh, and by the way, watch out for all the fake Graham Stephan accounts in the comment section telling you to text a WhatsApp number. Those are all scammers, and as soon as I go and delete and block those accounts, they just go and make new ones.
What? You're telling me Lorenzo, who sent me his WhatsApp number, is not actually real?
Apparently, the YouTube algorithm thought it would be a good idea to start recommending Bitcoin content to me late at night when I couldn't fall asleep.
You know, this is a funny story. YouTube has actually started doing this a lot more. And in fact, they recommended me some guy who said we should buy Bitcoin when he was at, like, I think $500 or $5 actually. And I'm just like, YouTube, why didn't you tell me this a long time ago?
In a recent video, I shared my thoughts, I shared my concerns, I was very critical with several aspects, and I said I wouldn't mind placing a very small percentage of my total portfolio into Bitcoin just as another way to diversify. That did not stop a lot of people from making response videos as to what I had to say. And chances are, if you made a video with Graham Stephan and Bitcoin in the title, chances are I've seen it.
Oh, he's gonna see my video. That's probably why I'm making this.
And I would say there's a few main points that people disagreed with. The first was my claim that cryptocurrencies are subject to price manipulation, and I used the 2017 run-up as an example that pushed up the price right before it dropped 80%. Now, the counter-argument that many people used is that, sure, cryptocurrencies can be manipulated, but so could any other currency, and that's confirmed.
You know, this point right here is a very big point that I want to touch on, and this might take the entire video actually. It's no shock that all these major like companies and banks actually do like hella sketchy stuff, but it's no secret. You see JP Morgan, you see Goldman Sachs, they pay fines almost every single year at this point, and some people still think this is a good thing that institutional investors are coming into this market. Let me give you a little heads up. This market is currently unregulated. Do you know what that means? No matter what these companies do, they're probably not going to face any fine. Look at Ripple, for example, for the unethical way they actually decide to distribute their cryptocurrencies. Those guys are most likely not going to pay any fines. Actually, maybe they will probably pay a fine here or there, but they're not going to face any serious consequence because there isn't much regulation there. In fact, the reason why they're trying to get them right now is they're trying to force fit them into an already existing regulation. Let's take Grayscale, for example. Grayscale, they currently buy their Bitcoin or any of their currencies over the counter, meaning they don't have to be subjected to slippage fees. Meanwhile, they sell said asset at a premium. I think their Bitcoin premium is about 20%, meaning that they've already made 20% of the underlying asset price before anything even happened. Plus, something to also know is their minimum buying price is 25,000. Let's do a simple math right here. If Grayscale had 10 BTC that they just bought over the counter, they only need to sell about 5 of that to make 100% of their money. So now they basically have 5 Bitcoin that they acquired for free. Plus, another thing to know is even if banks are currently buy more cryptocurrency. It's not really a certainty whether or not they're actually going to keep this as a as an alternative to their cash reserves or gold. One thing is actually seen happen before in the 2008 financial crisis is that these banks may just be acquiring BTC over the counter, by the way, which is something that is very important. They could be selling it to individuals and then also shorting the price on the back end of things. Obviously, that's something that can never happen, right? What we could actually be saying is a gold rush part 2, and these institutions are just coming in to sell shovels. Because what do you think is more likely? Something that has reached way past its all-time high, and then banks are coming to buying in late because all of a sudden people who went to university to do risk management are affected by FOMO the same way the rest of the market currently is. Like, I'm sorry if I'm rambling over this. I just find it difficult not to look at this with a bit of skepticism. You have institutions with cash reserves way larger than the Bitcoin market cap currently moving into an unregulated market with highly educated individuals, and you think they're not here to just profit off the lack of regulation on the back of normal investors, by the way.
I think the more regulation put in place, the more serious and comfortable people will feel with Bitcoin.
He's right.
But I think it also has the potential to lose its original allure of placing your money in something that's completely decentralized and completely separate from everything else.
Speaking of losing its allure, isn't it funny how the initial creator or group of people who created Bitcoin made this as a way to do peer-to-peer transactions, and right now no one is talking about that anymore. People are looking at it as a way to store the value of your cash. In some sense, you could say that Bitcoin failed at its original task. In fact, if Bitcoin came out today, no one would really look at it because there are way better blockchains right now than Bitcoin. But you still have to respect the grandpa of the group.
There's no specific reason why it's trading at $40,000 instead of $20,000 or instead of $60,000. It just is.
He's right, but one thing I've seen is you never bank on the fact that the market is actually going to be rational. Gold has a $10 trillion price right now. One thing, gold can actually make physical products. 2, gold is much more difficult to steal in bulk. And 3, gold is something that has been widely recognized for a long time. Bitcoin, it's been recognized for about 5 years. It has a known fixed value, but Pokemon cards have a known fixed value. But to be fair, they too, they have price. It's just that Pokemon cards have been argued on whether or not they're going to be a world reserve currency. All it takes is some 14-year-old hacker to find what your private keys are, and that Bitcoin is gone the way of the dodo. I cannot see financial institutions actually investing heavily in something that can be stolen at any time. If anything, they're the ones who do the stealing. And I guess this is like a main point on why I look at Cardano as being like a major competitor in this space in terms of institutional adoption. Because Cardano comes with something that not a lot of blockchains talk about, which is metadata. Metadata is something that will carry information about where this cash came from, who actually owns the money, who is going to. This is really important because if someone steals your Cardano or your ADA tokens, you could actually potentially reverse that transaction or actually block it because the sender is not coming from a verified address. Something like that.
As Tom Heavey pointed out, MicroStrategy has bought $1 billion worth of Bitcoin recently. Grayscale's Bitcoin investment fund raised over $3 billion last quarter, and data has shown that large institutional investors are driving a lot of the demand. Now, the argument against this is that maybe some of those institutional investors are more like speculators who don't really care about Bitcoin at all, and they just want to make as much money as possible in as little time as possible.
That's the point I also made like a few cuts back. It's like everyone knows Bitcoin. It's like this is the best place to make money. You know, most institutions, they leverage their expertise to make a lot of money. And the thing is, don't you think this is a prime time to do that? Everyone knows what Bitcoin is. Not everyone knows what it actually does or how it works.
There's also the argument that the more Bitcoin grows, the less risky and volatile it's going to become.
Bitcoin is currently sitting at almost 1/10 of the current market cap of gold. 8 months ago, Bitcoin's price fell just because people thought Satoshi moved his wallet.
And lastly, let me just say this. Many of my original thoughts on Bitcoin remain unchanged. I still think it could potentially collapse down to nothing. I also think it might head to 100,000. I don't think any amount of charting or analysis is going to accurately predict when and where this will end up. So I would never advocate anyone buying in an amount that they're not fully prepared to lose.
Thank you. Do you know he said something that I really so much? You guys are trying to do guess and catch on something that doesn't even do anything. It makes no sense, and I keep seeing people do this. In markets like this, you're meant to look at fundamental analysis. This isn't a fully matured market. This isn't anything like the stock market or forex or anything. You have to look at fundamentals to do this. In fact, even in all these other markets, fundamentals still matter the most in terms of making the most money. But you know, who am I? What do I know?
People believe that there is value in the network effect of Bitcoin, and that the more people use it, the more trust is built, and the more likely you are to get the price that you ask. There's also
Network effect. Where have I heard this before?
Bitcoin's different, guys. Bitcoin's valued by the network itself, the network effects itself. As more people converge on it, the value increases over time. And if you want to talk about the product itself, it's a hedge against monetary inflation. The value derives from the fact that people have an alternative way to invest their money when the government loses credibility over time. So the value proposition of Bitcoin might not be a tangible product, but it's the fact that people converge on this because it's better. It's just a better form of currency.
Now look, see, I like Lorenzo, man. I like this guy. He's one of the few people in the crypto space that actually looks at fundamentals when they're talking about crypto. But I have to address this point real quick. A lot of people in crypto talk about inflation like it's a really bad thing. Let me tell you, for a lot of people who didn't do economics, inflation is actually needed. There's a reason why Bitcoin right now, with no inflationary aspect to it, moved from a peer-to-peer currency exchanging technology to where it is right now, a way to hold your assets value. That's because inflation is meant to spur spending. It's meant to make people spend more on things. It's meant to prevent people from holding cash. Like inflation took a lot of research and game theory to get about to how to properly control it in monetary policy. It's needed, okay? It's not always a bad thing. It's time to talk about network effects. Actually, I think this video is already way too long, so I'll save this for another video, okay?